I just want to start on the website really quick to point out a few things because I think we've got a beautiful website. Um, there is constant state, what would you call it, expansion. We plan to be in all of the blue states as soon as possible. My underwriting department would probably be pretty grumbly if I said we'll be there before the end of the year, but hopefully soon, maybe even before the end of or around the close of the first quarter, we should see that we'll be in most of these blue states. We're constantly updating it. Every time we go live in a state, it turns green. And then the pink states are not currently on the state expansion plan. So be on the lookout for all these other states that will be rolling into very soon. You can always come in here to log in. I tend to like to come here, log in, and then save it as a favorite. But in case you're trying to find out how to get logged in and you can't find that email that was originally sent to you, you can always come here to the website and use that login feature. This is what our dashboard looks like. It is very intuitive. You're going to have a lot of what you would typically expect to see in a dashboard. You've got your policy log, your quote logs, settings, and then we've got a few other things. We've got resources that we like to add. And what I want to really, really highlight outside the resources is this chat feature. You can use it here or here in the right-hand corner. Something that's very near and dear to us is that we're kind of acting as a hybrid insurtech company or a hybrid between insurtech and traditional insurance companies, where we are providing you the convenience and efficiency of technology, but we're backing it very heavily by human interaction. So anytime you have a question, whether it's, hey, I can't get logged in, or does this fit? How should I classify something? I need to backdate a bind order, whatever it is. If you click this little chat button, whoever's behind that will be able to help you. They'll have some type of underwriting authority where they can help you walk through the process. They can help really truly resolve your issues. You're not going to be hit with a computer bot back there or somebody who transfer you to someone else. You should be able to be they should be able to help you troubleshoot and resolve any issues you have. So please take advantage of that. You might catch me, you might catch Mike. Every once in a while, you'll even catch Bill Deemer, our head of underwriting. It's always kind of fun just to peek in and see who's back there monitoring the chat bot. Our resources are quite nice and they're constantly being updated. Here at FAQs, if you download this, it'll give you a Word doc of our FAQs. What I suggest to you, because we are constantly updating it, is that you go in and you look at it in the Word format, but don't download it to your desktop, because if we do update it, then you might not be able to get some of these new updates or be able to find some of the answers to the questions that you may have. Underneath FAQs, most of this are resources that you can provide to your client, and quite a few of them you can go in and co-brand as well. If it says add your own logo, that's something that you can co-brand. Just added loss control resources and management resources that are really helpful specifically to restaurants. Settings are just a quick overview. You can come in and update your password and your email address. Not overly exciting, but absolutely available to you if you need that. We're also happy to help you out with those things as well. Policy logs and quote logs are very similar. Here you can search by several areas. We're giving you some examples. You can search by the account name, the address. You can even search by the producer. But in this corner here, you're able to filter. What's really cool about this is that you can come in and say, okay, we've got some canceled policies. You can show the ones that are bound versus active. Bound obviously means that you've gone in and you've issued the policy. However, it's got a future effective date. So you're not seeing that it's active yet because that effective date's in the future. Quotes are really very much the same. The largest difference is that there is a lot of different filters that you can use as far as the status is concerned of a quote. I would really, really highly advise that every once in a while you hop in here and you hit the expired button. Because our quotes will sometimes expire. Maybe it's by the effective date that you used. A lot of times when we have new ventures, we'll use today as the effective date. So between expired quotes and referrals, I would just go in and check those out. Referrals ultimately mean that you need an underwriter to look at it and approve it for you. It's in referral state, but until you've actually hit the referred button, and it's not in front of the underwriter. So you'd want to come in here, you'd want to click action, and then you'll see here that you can refer it now. Our referrals, we try to be very, very transparent. We're saying this is it was rated as a fine dining restaurant. Let's make sure that Brandi over here at the agency isn't making that up. And then also let's check out the crime score of the area. If you hit refer now, an underwriter will be in contact with you very, very quickly. On average, it's our goal to turn these things around same day, but honestly, in most cases, we're turning them around within the hour. I want to show you really quick, just a little, I won't bore you with watching me do data entry, and I'm certainly not going to bore you with watching me terribly type, but there is a little feature that I want to show you that we have. When you hit start a new quote, your first step is basic information. This is where you're going to put in your named insured info, the contact info, and the location. So basically your deck page and your insured contact info. Once you hit continue, that starts a draft. Now you have a submission draft, but it also removes the basic information. So if we go back into the dashboard and I pull up do I have a good bindable quote? Let's pull up this one. You see how now we're in the underwriting information? That was step 2 and basic information disappeared. I would just suggest that when you're on that basic information page that you're really careful to put the correct contact information and email address in there. We've got several features where we can set up an account for the insured to log in and have access to their own policy documents. There are features where you can share the quote with them from the summary tab. So getting the correct contact information is a big deal, but also getting the correct location address is a big deal, because once we put that location address in there, every other step that you walk through in the quote process, we're pulling API, we're pulling data from different partners and from the internet to help us underwrite this policy throughout the platform. So if you've got the wrong location address, then we might be underwriting the wrong account for you. The concept of our platform, it's very much built with a retail agency in mind. We like to sit back and think, okay, what are the pain points of the agency? What do they love? What do they hate? How can we really, really, truly support them? That's why we're always looking for your feedback. We thought it's generally best if you guys are able to, if we're able to reduce the underwriting supplemental application, if you will, to just the most basic relevant information needed for the class. And if we could front load all things eligibility driven. So underneath the underwriting tab, this underwriting information tab, this is everything that is typically eligibility bearing. It's going to help tell us immediately if this is going to be a decline, a referral, or something that's within your authority to just pass through. If you did something that was a decline, let's say it's a bar and tavern, and then you go all the way through to continue, you're going to get a decline immediately. We're not going to ask you to continue through the application, wasting your time. If you get a decline, and you think that maybe we should reconsider it, perhaps it was declined incorrectly, then you're always welcome to call or email us. I would again highly advise that you use this chat feature, because you're going to get a really quick response that way. And then I'm always available. You'll all have my direct contact information. You can call, text, email. I can run, but I cannot hide. So we'll come in here and we'll give a good classification. We'll provide casual dining. Everything wine bars and above are classifications that we write. Everything below wine bars are classifications we don't write. To help you kind of understand how best to classify a risk, we've provided some examples in parentheses, just a few characteristics like casual dining, the waiter brings the food to the table. fast food dining, there's no table service. Things like that kind of help identify what classification this restaurant's going to fit in. One thing I do want to point out is that a wine bar is always going to generate a referral. That's not a bad thing. We just want to make sure that it's truly a wine bar. It fits the appetite. And typically those wine bars are going to have higher alcohol sales that are going to be outside your authority. And just because it says Brandi's Dive Bar and Tavern does not necessarily mean it's a bar or tavern. If it's Brandi's Bar and Grill, you don't have to use the bar classification. If they're closing at midnight or earlier and they've got 65% or less alcohol sales, they're probably not a bar. I would probably consider one of those a casual restaurant. Again, if you're not sure, you can always you can email me, you can reach out to Underwriting, or you can click this little chat feature. Send us over the name of the restaurant you're working on. We'll be happy to take a peek at it for you to pre-clear it before you go through the system. Most of this information is going to be a very reduced version of a supplemental application and your Accord 125. So we're going to ask you how many locations they have, what their claim history looks like. Are they an arsonist? Have they declared bankruptcy? Things like that. So this is your 125. Anything other than none of above is generally it's going to generate you a decline. One thing here I'd like to highlight is that if there are multiple locations, our underwriting appetite states that we can write an entity that has up to 5 locations on a single policy. Currently, for a very temporary period of time, we have a systems limitation that will not allow you personally to do multiple locations. So if you have a risk that's a multiple location, just let us know and we'll see what we can do to help you out with that in the meantime. Or what we're really encouraging you to do is create a policy or a quote per location. If they've had any claims, that is not going to be a hard decline. Within your authority, you can write one claim at $50,000 or less in incurred losses. If you've had 2 or more claims, that's going to generate a referral or a decline over to the underwriter. We're not asking you for a traditional submission. And generally speaking, we're not asking for hard copy loss runs until you're reporting to us that there are some type of losses. We do want to know the story and truly understand the loss history when that happens so that we can help properly rate the risk for you. We're okay. So what we've done here is really interesting. These are master sub questions. So instead of you saying, yes, there's stairs and it generating a referral, we're just going to ask you the other underwriting questions or go ahead and give you the guidelines around stairs being used by patrons. So in this case, we're saying, okay, well, the guidelines are that they need to be adequately lit and well maintained. So we're just asking that you understand that you know that the insured understands that and that they're in compliance with those regulations. This is what I would consider an eligibility box. Everything that you're going to see in this box are certain characteristics that are typically indicative of a bar, an entertainment venue, a sports venue, certain characteristics that are not typically what we're looking for in a true eating establishment. So if they have a designated raised dance floor, that's probably not a typical restaurant. So we're going to throw a referral on that. An ATM, you might catch a referral. Most of these are going to generate either a referral or a decline. Generally speaking, your average neighborhood restaurants don't have door bouncers. To be very clear about the animals in cooking or dining areas, this is a very standard approach. Most health departments don't allow dogs to be inside the restaurant. If dogs are allowed outside on the patio, that's okay. We're just asking to make sure that they're not sitting in the kitchen where we're prepping food and they're not sitting in the dining room. If my dog was in the dining room, it'd be begging everybody around, so nobody would want that. Playground is another master sub question. We're totally fine with playgrounds. I've actually heard lately that there are quite a few markets out there that are kind of weary on playgrounds. We're okay with them. We just want to make sure that they don't have the characteristics of playgrounds that I played on as a child. So no metal swings or chains that are going to pinch the kiddos, no third-degree burns from the slides, things like that. And then this is your last eligibility box. This one right here is weeding out things that are more like mobile food trucks and vendors, things like that. We're okay with catering. We're even okay with ghost kitchens, but we're really trying to stay away from mobile food trucks and trailers and mobile food vendors. So the folks that go to farmers markets every once in a while are not going to fit our appetite. And those operations that are just a dedicated food truck or trailer. If you do have a brick and mortar restaurant that maybe every once in a while uses a food truck or trailer for catering or maybe a one-off event, that would be a good situation to give our underwriting a shout or give me a shout and try to get that pre-cleared. We're not 100% black and white in our underwriting model. That's why we've got humans behind the screen. We want to understand the story, and if it makes sense to make an exception, then that's what we're here to do. Our underwriting approach is a very common sense approach for the base underwriting model. Most all local ordinances follow the NFPA guidelines. And the NFPA guidelines say that if you have 300 or less in max capacity, you're not required to have a fire alarm. If you have more than 300 in max capacity, you're required to have a local alarm. So if you are a Taco Bell, probably no fire alarm. If you are a Texas Roadhouse, probably a local alarm. If you're a Cheesecake Factory, definitely a local alarm because they've got a huge max capacity. But generally speaking, they're going to fall within these two. At the bottom of this page, you'll see that we're asking you for the capacity. If you've got none here and you put in 500 capacity, you're going to catch a decline or a referral because it doesn't appear that they're following the NFPA or local guidelines. This is an interesting question. So we will write up to 6 deep fat fryers. The concept behind it is it's kind of like an old legacy underwriting model question where it's the higher the deep fat fryers, the higher the likelihood of a kitchen fire. So if you've got somebody that is maybe a fast food kitchen restaurant and they've got more than 6 deep fat fryers, I would generally say give our underwriting team or myself a call. Let's pre-clear that and model it out. But right now, anything in excess of 6 deep fat fryers is going to be a decline in the system. That is not something you'll have authority to make an exception on. We're okay if they're responsible for a parking lot. That's just good information for us to know. And then this is another NFPA. I call them tripwires. So the NFPA says that if you have wok cooking, you must clean your hoods and vents quarterly. We will, in fact, write all types of cooking. The reason why we're asking the type of cooking is because there is different regulations around different types of cooking. If you have charbroiling, I believe, correct me if I'm wrong, but isn't that monthly, Mike? I think it is.
Yes, this is monthly.
Okay, so you'll see that some of these are a little bit different. I do have an NFPA reference guide that we're putting together. I can shoot that over to you for reference just so you can kind of understand where those base points are at. We are okay with some remodeling because we will write new ventures as long as they've got 3 years prior experience. If there's just a minimal amount of remodeling, let's say they need a certificate yesterday so that they can sign their lease and get moved into the place, and all they need to do is slap some paint on the walls, hang a few pictures, and maybe bring some furniture in, our underwriters will maybe consider making an exception and getting on that risk early. If you select yes here, we'll take that into consideration. We'll want to know what the scope of operations look like, or renovations look like. But if it's a true renovation, we're probably doing the client a disservice by not putting them on a builder's risk policy. So just be mindful that when we are making an exception, that we're doing it at the benefit of the client. Under no circumstances will we write a cash only establishment. That is going to be a hard decline always. We'll do up to 250 employees. We'll do up to 18 hours a day. So we're not doing operations that are 24 hours a day. And we're not doing operations that are open past midnight. The longer they've been in business, the more credit they get for their experience. It's definitely something you're going to want to keep in mind. But if they are a new venture, that's okay. We will write a new venture. We just ask that you confirm they've had 3 years prior management experience before opening up their own restaurant. Any luck? I've answered, I didn't do it. What did I miss? It's always the deep fat briars. We'll do up to 10 million in gross annual sales. Your agency has authority for up to 1 million, 2 million, and general liability limits, defense outside. If you need 2-4, that is something that we can do on a case-by-case basis. It will be a referral. I can't promise you it's going to be approved every time, but generally speaking, we see those get approved when an umbrella is needed or by contract, they need higher limits. We're going to ask you what the reasoning is for having higher primary limits before we can make sure that that's something that would be approved by the carrier. We're okay with catering. I don't think that we even care how much catering. We'll do up to 100% catering, correct, Mike?
Yes.
We just won't do their hired non-owned, and we won't do their scheduled auto if they're 100% catering. Yeah, so we'll offer hired non-owned up to 1 million as long as it is not advertised intentional self-delivery. 100% catering would certainly be intentional self-delivery. We're okay with alcohol sales up to 65%. There are some caveats to this. Your agency has authority to quote and bind up to 25% for all classes except for fine dining. Fine dining, we recognize that they have higher drink prices, so we've increased that authority up to 35%. You can do up to 1 mil on the liquor liability. That is not included in the GL. It is a standalone liquor liability coverage. What you're seeing here is no questions or supplements for assault and battery. That's because we're including assault and battery. When you start to get into that 50 to 65% alcohol percentage, then we're probably going to have a conversation with you about potentially excluding that assault and battery, but we will allow you to buy it back in supplements up to 1 million. We just want to make sure that the higher the alcohol sales, we are getting the rate needed for that assault and battery. We're trying to be competitive, but responsible at the same time in our underwriting approach. So hired non-owned, like I said, no self-delivery. We'll do up to 1 million limit. We are totally okay with third-party delivery. We are not okay with robotic delivery. There's pretty interesting stories about robotic pizza delivery online. I would encourage you to dig into that. This is 100% your Accord 140. There's not a whole lot more other than the Accord 140. It's just an electronic version. We've pulled a lot of the data throughout this process. Once you've entered that location, we know what year it was built. We know quite a bit of information on the location, but we feel like you as the agent tend to be more stronger source of truth when it comes to certain things like the construction and the building updates. Very standard underwriting approach. If the building is younger than 25 years old, then we're just going to ask you when the roof was last updated. If it is in excess of 25 years old, we're going to ask you when all the building updates have occurred. So we're looking for building updates to have occurred within the last 20 to 25 years. And same with the roof based on what type of construction it is. We will work with you on roof updates because some roof materials have longer lifespans than others. We understand that. So as long as we truly understand the type of roof, then we'll be able to better understand how to underwrite those updates. I believe there is credit for sprinklered buildings, correct?
Correct. There are credits for sprinkler buildings.
So along the way within this 140, when you're answering questions like if it's sprinklered, there are credits built into it. So if you are not sure if it's sprinklered, I would typically say no. I've been a retail agent. I've been in the situation where I've had to say, hey, your location's been inspected and it was not written correctly, so we need $1,000 more. They don't like that. So it's always best to tell them that you got them a credit, then go back and tell them that you need more money. So just know that if it's sprinklered and you're very sure of that, be sure to click yes, because there's credit. If you're not sure, I would hit no on that. Building coverage is interesting, and I'm not sure what states you're all from. I know, Rachel, you're in Texas. There's a little caveat with this. So the standard ISO BOP says that tenants, betterments, and improvements is included in business personal property. But if they don't own the building and you would like to carve the betterments and improvements out, you're certainly welcome to do that. And in most all cases, there's going to be rate relief. That's why we're giving this to you here. In Texas, however, there is not rate relief. It is in fact more expensive. So if there's a benefit to you to come in and lump that BPP and the betterments and improvements together, and just the one limit underneath BPP, at least for the time being. If and when that changes, I'll be sure to let you guys know. But outside of Texas, I would certainly separate that. If you're not trying to separate the betterments and improvements, please put 0 there or it won't let you move forward. This is not indicated as 0 on the quote or the deck page. It will say included if you've got 0 here. We don't care about your AOP deductible. And if you're in Texas, we absolutely care about your wind hail deductible. What you're going to find is that our wind hail deductibles are very reasonable in Texas. A lot of North Texas deductibles are going to pre-select at 2%. If you're sitting in the DFW area, you'll see that this is a 2% deductible and it's pre-selected. If you try to drop it down to 1%, it's going to stop you dead in your tracks. It's going to tell you that we can't offer 1% on this risk. So you can always increase the deductible or remove the coverage, but you cannot decrease the pre-selected deductible. We're okay with all building types. The one in here that's going to catch you an extra question is going to be HAB. If there's a habitational structure attached to the restaurant, we just want to have some information around that. Like, does the manager or owner live in the habitational section? And if not, do we know if there's an adequate firewall between the two? This is my favorite tab. So excuse me while I nerd out for a second. So underneath the view packages, we're going to give you a complete breakdown. If they do a good job on this website, breaking everything down, that is the difference between the blue, which is your base ISO BOP model, and the green, which is our enhancement endorsement. And at the bottom, there are all these other coverages and the limits that you can further enhance the policy with. I sometimes think that it wouldn't be a bad idea when you're delivering the quote to just send a link over if they want to do a quick view to understand what the difference is between the two. It's just such a clear presentation this way. In what we've done here, and I don't know if you've ran into this, but I personally have ran into situations where I'm working with a prospect or policyholder and they say, well, your enhancement has 5,000 in outdoor signs, but this one has 10,000. So it's way better. I'm going with it. You probably roll your eyes and try again next time. Then you've got the insureds that say, stop nickel and diming me with all these bells and whistles that I don't need. So to resolve both of those issues, you can say, yes, we do want that enhancement endorsement, but we'd also like to customize it. And we're going to increase that backup of sewer and drains to match, our competitors, or to really provide a higher limit based on the insured's needs. You can also say, no, I do not want the enhancement endorsement, but it's a restaurant. They absolutely need equipment breakdown. And they're definitely going to need some of these other coverages like food spoilage and backup of sewer and drains, contamination shutdown. So you can come in here and pinpoint or very intentionally select which coverages they need. That's the resources, sorry. If you look right here in the breakdown, you'll see this little button here that says customizable. Those are all the coverages that we can customize outside of the enhancement endorsement, either with or without it being elected. So let's say that they don't want any of that. You can also add cyber liability up to $1 million. You can add employment practices liability up to $1 million. You're not going to catch any questions on cyber liability up to 250,000. If you want a higher limit than that, you're going to catch a couple of supplemental questions, very basic, reasonable questions. Have they had any losses, and are they doing what they need to do to avoid potential losses in the future? So are they following best practices, and what does their loss history look like? With the EPLI, one question you're going to be asked: have they ever had a loss, or do they know of a situation that may give rise to a loss right now? If you say yes, they will not be eligible for employment practices. If no, we'll give you all the limit and deductible options for you to go in and select that. So you can truly customize these policies. It's quite nice. Our additional interests are free. So in every case, you should provide a blanket AI and waiver on all of your quotes. If you need something very scheduled or specific, like a mortgage holder or loss payee, you can find that right here. It's just a master sub question. You hit yes, we'll give you the options, and then you can complete them. My second favorite page that I think is very helpful for agents is the discounts page. This is where we're giving you the opportunity to express to us what your client does that is above and beyond an average restaurant, so that we can help you apply more competitive pricing. If they're a member of a restaurant association, this is over our IRPM, by the way. We've got, depending on the state, anywhere between 25 to 40% credit debit that can be applied over the base rates. That's standard underwriting practices. These are different types of discounts our underwriting team has come up with to recognize that a restaurant's really doing something that is typically above the standard operating. So restaurant associations, public profiles like Google and Yelp, members of franchises also often have a much better loss history. They have higher regulations that they have to follow. And these are 5% each. So that's 15% right there between those three. And then of our IRPM, we trust you to come in and tell us, are they doing any of these things that will allow us to further credit the policy? These are up to 20%. Each little square that you select is 5%. So that's an additional 20% credit being applied to your policy. If all of that credit, if all 35% of credit that we've just applied here is for some reason not enough, we still don't think the pricing is reasonable, you can say yes, that you would like to refer it to underwriting for more pricing consideration. If you're going to refer this for pricing consideration, I highly suggest that you give them some type of target pricing, whether it be the expiring premium, the renewal premium, or some type of premiums that you're seeing while you're sending it out to market. Give them a ballpark to work with. What you don't want to do is start a volleyball game back and forth, because if you just send this over to underwriting with no target pricing, they're shooting in the dark. They don't really know where to start for you. And then also, please be sure to give them some description of the risk that shows that they are best in class. Policy effective date. You can bind effective today. You cannot bind effective yesterday unless you ask Mike really nicely. We, again, have created a system that is very friendly to humans. So if there's a situation that comes up, we understand it's very common in our industry that you need to backdate. Unlike a lot of other carriers, you're not going to hear us say, sorry, system won't let us. We're going to find a way to help support you and your agent every chance we get. And I think being able to backdate something is a really good example of us understanding your needs, your clients' needs, and doing what we can to help support those. You might need to send over a no loss letter, pretty standard operating procedure, but know that you're not stuck if you need to backdate a day or two because of whatever reason. We have all the payment plans everybody has. You get a 5% discount for pay in full. You can do a monthly payment plan. What we have that nobody else has is a pay-as-you-go plan. This is for those of you who are a million years old like me, and have been doing insurance forever. This is old school monthly reporting plan, but they've found a way to automate it. An example of the automation, everybody's point of sale systems are different. We're very flexible. We will work with the insurer on how they can get their reports to us. But an example of automation would be like Toast. Toast is one of the more popular point of sale systems for restaurants. And that system allows you to put an email address in it. And once you've put the email address in there, it will automate sales reports at the end of every month and send it to those email addresses. The operator doesn't have to remember anything. They don't have to click a button. They're going to set it and forget it, and it's going to be done. So if you issued this policy on January 1st, we would get the report on the close of January 31st. On or within the first couple days of February, we would adjust the premium based on the actual sales and send over notification, as well as ping the policies or ping the payment plan that you owe us X amount of money for your installment or for your January, your month of January. We are auto pay in everything that we do. Right now, we can facilitate credit card and debit cards. So while we don't really, in the pay-as-you-go plan, don't really collect a down payment because we are auto pay, we do have to collect their payment information. I'll show you what it looks like to issue a pay-as-you-go policy. Ultimately, we're going to charge them 50 cents to issue the policy, and then their true first installment is the following month. Whereas these other plans, we're going to issue the policy with them making their first down payment or their first installment. Pay as you go. This does, in most all cases, eliminate a final audit. Now, because everybody's point of sale systems or their reporting is going to be a little different, there may be some cases where we do need to audit, but in most cases, pay as you go is going to eliminate essentially the down payment. It's going to eliminate the final audits. And the other big selling point is that they're not paying higher fixed premiums during lower yielding months. So seasonal towns, college towns, things like that, where they have big spikes and highs and lows based on traffic and holidays, those guys are going to be really hurting when they have nobody in town visiting. So it really helps them out. Summary is a high-level view of some of the coverages that you've selected. You can come in here and you can edit the application. You can change the payment plan. But what I really want to draw your attention to are these bright boxes. The premium that you have quoted for this is $900 or $9,100. That $9,100 is the annual premium for this risk. We're saying that if you elect to join Rainbow Rewards, you're going to get a $499 discount, making your premium $8,600. If you go to download the policy, I'll show you what it looks like really quick. It's a bit confusing seeing it right there in the green and the blue, so I just wanted to point that out to you. We have a very transparent quote. Our quote and our deck page are very similar. You'll see here that the presentation is not going to be that of the discounted premium. This is the annual premium. So if you want to tell them, hey, we can save you $499, that would be a good idea. For the Rainbow Rewards, what that is a 5% discount for uploading 5 photos at binding. When you go to purchase the policy, it puts you in limbo between summary and payment, and that limbo is Rainbow Rewards. These are the 5 photos we're asking you to upload. So restroom, dish prep, kitchen, hoods and vents. That is definitely worth a 5% discount. Not only do they get that 5% discount, they get access to loss control resources. And in some cases, not all, but in some cases, it would eliminate an on-site physical inspection, which restaurants as well as most insureds are not particularly a fan of. This is a cool feature. This is what I was talking about with the basic information. If you get the right email address in there, you can share this quote. What will happen is your insured will get an email and it'll say, hey, we've set up an account for you. You can go in and see your quote. And also they can come all the way through here. They can upload their own photos and then they can continue to purchase. Purchase is very basic. We've got the 4 standard disclosures, which by the way, these are all included in the quote. You get their credit or debit card information and you hit pay. You can see that's the 50-cent down payment. We're just collecting their payment information. Concept of Rainbow's quote and policy is to be as transparent as humanly possible. If it is an exposure that you have highlighted, it's going to be listed. If it is a coverage that is available and not accepted, or a coverage that is available and there's a limit there, we're definitely going to highlight all of those things. But most importantly, if it generates 1 cent in a premium charge to your client, we're going to let them know. It's a very nice line item version of what the core coverages are included in your offer to them. Now, if you did the backup of sewer and drains, in this case, I think I took the enhancement off. If you did backup of sewer and drains and you did not customize it, it would say 5,000 here, and then it would say included in the premium. If you increased backup of sewer and drains to 25,000, you would see the premium here associated with that additional 20K in coverage. This can be a little confusing or alarming the first time you see it, so I want to draw your attention to it. We're trying to highlight the discounts, but for some reason it didn't calculate here. Typically what you're going to see is you'll have the discounts highlighted. The premium subtotal will be the actual total premium. And then there's additional fees listed. And then what's called the total advance premium is actually the total estimated annual cost. It's the premium plus the fees. This is us trying to be transparent. No hidden fees or expenses from Rainbow. That $297 can be broken down here. There's a $25 policy fee for every policy issued. There's a $2 installment fee, and there's a credit card processing fee of 2.7%. That $297 is including all of that. So it's all of the installment fees, the policy fee, and what we're estimating their credit card processing fees may be. Complete comprehensive schedule form schedule. We will give you all of the payment options, regardless of what payment plan you've selected in quoting, just so that they can really see what's available in case they change their mind. And then you can see here, it's a 34-page quote proposal, by far the most extensive quote proposal I've ever seen. We'll give you any type of notice and disclosure that you could potentially want or need to put in front of your client, including some of the forms that I personally have used as a retail agent and as a wholesale broker. We don't ask that you sign these forms and send them back to you. I never want to see another signed accord form for the rest of my life. So you're not really going to see much in the lines of binding subjectivities. This is just for you to use in case you want to for your files. You're getting credit card information. It can kind of be sensitive. So in addition to all these forms in the quote, we're going to give you a completed application at the end. Everything, every step you went through, every question you asked, everything is going to be pre-selected in this application for you. And you'll get an option to get that signed at the end in case you'd like that for your file as well. Do you have any questions, or is there anything else that you'd like to see through the platform or the quote portal? That is it for me. That is pretty comprehensive, start to finish, what you can come to expect for Rainbow with regards to quoting and binding, the application, high level underwriting view. You can use the chat feature for the underwriters. You can call me whenever you want if you have any questions.
You've got a couple questions that just came through, Brandi. So we have Jeffrey asked any update on umbrella limits available.
Umbrella is going to be coming out soon. We're in the final stages of that. I do not have a release date on that yet, but I believe we'll do up to $5 million when that does get released.
And then Ray asked, what does solid fuel cooking mean?
That's a great question, Ray. Solid fuel is going to be like your wood fire pizza ovens and some of like your barbecue restaurants that maybe have some of that solid fuel cooking. Like, what would you say, Mike? Like your pellet cooking, your coals, your
Yeah, anything with live fire. So anything with solid fuel live fire, mostly seen in pizzerias. So you would like to see those wood oven fire coal cooking. So that's solid fuel cooking.
charbroiling's listed there. That's an interesting one. Charbroiling is generally gas with the great cooking grill on top. What would you do if that was more of a, I guess you'd do solid fuel if it was like real fire with a grate on top though, huh? I was asking Andrew that the other day. What if it's both?
Sometimes it could be, or they could use propane. So it just depends. It just depends on the operation.
When I worked,
Thanks, Ray.
when I worked at a pizza restaurant, like farm to table restaurant in Brooklyn, when I was bartending, we had a wood fired oven in the back, and we would get all our wood from this like mom and pop's place like upstate, and then during like the holidays they would bring us like little like mini Christmas trees
Aw.
that they would like put together. It was very cute.
I worked at a barbecue restaurant with the smoker. The whole barbecue thing was on the inside. They didn't cook anything on the outside. So it was all solid fuel cooking on the inside. Everything smelled like smoke in my life, from my bedroom to my car to my school bag, everything. You couldn't hide, you couldn't get away from it. I was stinky. All right, well, if there's no more questions and there's nothing else I can show you guys, you do have my contact information. We've got that live chat feed. You guys are always welcome to reach out. And we look forward to seeing some submissions come through.
Thanks everyone. You'll get this recording either later today or early tomorrow, so keep an eye out.
Thanks. Have a good one.
See y'all.